Did you know Baba means dad in Chinese, and Baba means 88, and then Baba means shit? If I haven't won your attention over with that, I don't know what will. Hey everyone, Stephen from 11ish, and today we're going to talk about Alibaba, the Chinese version of Amazon, and so much more. It's a little bit esoteric just because it's Chinese and not a lot of people know about it, but there's a lot of value behind this company. They're doing a great job, and there's a pretty large growth opportunity. It's a long-term play though, and pretty expensive one at that. If this is the type of content you've been looking for, please hit the like button and let's get started. Quick reminder, I did a video not so many moons ago on Tencent, which is also one of the 5 monopolies of China. Tencent is tackling more on the consumer side around, WeChat, online payments like PayPal, but way bigger, and also online gaming. They've been partnering with a ton of interesting companies, including Activision Blizzard. So if you're interested in that business, please take a look as well. Like I said in the intro, we're going to talk about why Alibaba makes sense as a long-term hold. There's a lot of growth opportunities there. But at the same time, I think there's something to be had in the next 18 months as well. There are two main reasons why I say this, and one of them is Amazon. Amazon is clearly still capturing new market share. You can see this going to the pharma business, capturing the vaccine business, and it's getting hotter and hotter. The stock value is getting even more expensive. But a lot of people don't know is that Amazon also has a very, very attractive affiliate program for resellers. So if you imagine that when you're buying something off of Amazon, sometimes you're actually making a purchase where the seller actually doesn't say Amazon at all, right? It says some random dude's name that you've never heard of, and that's their affiliate business because it's actually fulfilled by an LLC that registers with Amazon and says that they can sell this product. They put in their own description, their own value prop for that product, and if there's a bunch of people selling that same product under the same brand name, and they aggregate all of those products into one listing. The reason why I'm bringing this up now is that a lot of people don't know this, but many of these resellers, they will basically find a product that has good profit margin and not so saturated market, and then they will go to Alibaba, a division of Alibaba called AliExpress, where they will buy 10,000 of that product at wholesale price. They'll ship it directly to Amazon, where Amazon handles everything after that. This business has created a lot of shrewd millionaires. As Amazon grows its business, not many people are aware that this is going to grow Alibaba's business incredibly well as well. During the Corona crisis, if you actually look at the listings, a lot of people were buying a shit ton of face masks from AliExpress and then reselling it on Amazon. So therefore, I think Alibaba has been doing very, very well during the crisis and was obviously doing well before the crisis. And I think as Amazon grows business, there's going to be even bigger opportunity to be had that has yet to be realized. The second reason a lot of retail investors don't know about is the fact that Alibaba is no longer just the Asian Amazon. It's actually a holdings company. That's what's listed on NASDAQ. And so what would happen is that they actually go into, they will find industries that have a double-digit growth opportunity. With their resource and connection and the fact that Chinese government is basically backing them, they dive in and then they make a shit ton of money. So the two latest tackles that they're working on is food delivery and cloud storage. Their food delivery already owns 50% of the 90% of the market share. The other half is owned by Tencent. This in itself is a huge growth opportunity as we move towards a different way of life, right? Secondly, the cloud storage market is always super attractive to me because, that is the future. Everything's going to be stored in the cloud eventually, right? And Asia is just moving towards that direction while we already saw what happened on the West. Amazon itself, the AWS business itself is quoted at $500 billion. Alibaba's current business is at $3.5 billion just because they just got started like everyone else. Side note, Tencent just started as well. Both of them are seeing double-digit growth. Alibaba, for example, they saw 87% growth year over year. That is incredibly healthy and moving towards the right direction. So with the food delivery business and the cloud business alone, I think it's going to capture a huge amount of market share way faster than people anticipate. And for those two reasons, I think there is a real potential for gain for the next 18 months because those are capturing new market share as opposed to incremental gain of their existing Amazon business. The other reason why Alibaba is a good bet is that their financials looks, even though they don't pay dividend like Microsoft, which is another stock that I invest and recommend, they have a huge growth opportunity. I think a bigger growth opportunity than an established blue chip like Microsoft. I think Alibaba has a bigger growth opportunity. They own a set of businesses that allow the end user to do and buy anything. Whereas in America, you have a company that specializes in office work. You have a business that specializes in food delivery, etc., etc. And so this is one of those companies that does that, is doing it very well, and therefore I think that it is very attractive as a long-term growth opportunity. I think Tencent is a better bet for a recession-proof play, whereas this is a little bit too close into the retail space. So if the world economy depends on Alibaba and AliExpress for supply, for manufacturing, then if the whole world market shrinks because of a recession, then I would expect Alibaba to shrink pretty hard. I don't think there are segments that are recession-proof can grow fast enough to avoid the recession. In my opinion, Alibaba is in the Microsoft category in the sense that it's too big to fail. They have more than $50 billion in cash reserves. So even if the recession hits, I'm pretty certain they're gonna survive. They're gonna have to do something really, really stupid to eat shit. For the last 5 years, this stock has gone from $80 to $200. I expect the same momentum at the very least. I think they're gonna capture a lot more market cap, and it's gonna make it a lot more interesting as well. The thing with the Eastern companies is that they always look at what the West is doing, make it work in the Asian user segment in terms of buying habits, expectations, in terms of merchandising and product discovery, and then they capture the entire Asian market. Alibaba is one of those companies that is in a perfect stance to do that. If you're looking for a place to park your 401 money, I highly recommend this along with Tencent. I hope this video proved helpful to you. Please leave a comment if you have any questions or concerns. As always, please exercise good bankroll management, and I look forward to working with you next time. Thank you.